Hey everybody, I'm Aaron Norris. It's Friday, episode 310. It's June 24th. And the Brexit. What does it mean for real estate? That and much more as we cover the biggest headlines in real estate. You do not want to miss the radio show this week. We've got Jack Shea with Jack Shea Real Estate. Jack is going to share what the market in 1980 meant for creative real estate, insight on the Florida market. I know a lot of you are looking in to invest out of state. He shares some insight about Florida, his investments in mobile home parks, build-to-rent tracks, and much more on this week's radio show and podcast. HUD in the U.S. Commerce Department said housing starts remain relatively stable in May, but overall trend is positive, which is good. Default for consumer credit looked more positive last month, with mortgage and consumer credit default rates decreasing month over month. Hope now has hit the $25 million mark, helping homeowners with solutions that do not include foreclosure. The National Association of Realtors reported existing home sales increased 1.8% in May, their highest since 2007, and sales of new homes decreased 6% last month to 551,000 nationwide. All cash sales declined 2.4% year over year and stand at 33% of all sales. During the bottom of the bust, they stood at a whopping 46.6%, and during the last peak, it was, I think, somewhere around 25%. California holds 7 out of 10 spots on the top 10 hottest markets list from the National Association of Realtors in June. Dallas, Denver, and Fort Wayne, Indiana were the only non-California cities that made the list. The list is created by looking at the number of views, I think, on Realtor.com, and then by the quickest moving inventory. So I guess there are a lot of eyeballs on California, and then the inventory moves very quickly. The Financial Stability Oversight Council's annual report was released to Congress this week, and it's time to put real estate back on the forefront, so they say. The FSOC was created by Dodd-Frank, and members sitting on the council include members of Treasury, SEC, FDIC, FHFA. You get the point. Topics on real estate include the low interest rate environment, risk in this market, conservatorship of the GSEs, and home financing, and it's only 150 pages. I've just started reading it. I'm going to link to the report in the blog, so if you want to go ahead and read that awesome report, there are charts. You can find it on the blog. The Federal Reserve is warning that commercial real estate got a little bit too hot, a little bit too fast, and commercial prices now exceed pre-crisis peaks in some areas, and prices have outpaced rental income, and this is nothing new for me, as our partners over at the Apartment Owners Association have been complaining about cap rates all year and getting a little nervous about the market. Janet Yellen says any tiny blip in the financial markets could have shockwaves through commercial, and that includes Brexit. So we're all waiting to see what happens there. And the sentiment is not just with the Federal Reserve. PIMCO and Deutsche Bank thinking the same thing. Fannie Mae has pushed back the release of its new underwriting program, which takes a lot of manual duties and makes it all automated, and includes a new credit tool which uses trended credit data. What is that? Well, with the help with Equifax and TransUnion, Fannie Mae will be able to see month-to-month data for consumers instead of just balance and delinquency data overall. So they're going to be able to look back 2 years. You know, maybe they've really gotten their act together in a year, and it's really supposed to be opening up a lot of opportunities for first-time buyers or people that maybe don't have a very good, not that it's bad credit, it's just they don't have any credit. So the new release date is set for late September, with the full release coming in November. I have to admit, I haven't been following Brexit in detail just because I honestly didn't think it was going to go through. So last night late, I'm getting text messages from my father like, holy cow, it went through. Couldn't believe it. So I've been trying to read up today on what this exactly could mean for real estate. And at least on the European side, some believe major real estate decisions are just going to be on hold because they're talking about UK leaving the EU could take up to 2 years. David Cameron's out. He's saying he's leaving office in the next couple months, and the next prime minister is going to get the great joy of unwinding their EU relationship. Some fear interest rates are already so low that in negative territory, you don't really have a lot of bandwidth to spur on the economy in the EU, and this just concern overall about instability. And now there's even talk that more EU countries are going to try doing the same thing within the next year. So everyone's just very nervous. So what does this mean for United States real estate? Maybe this means that more foreign buyers are going to come stateside because they think it's more stable here. Interest rates are really low. They can buy all cash and hide out here. Maybe join Chinese buyers and moving money out this way. It's going to be interesting to see. But what do you think? What do you think the Brexit is going to mean for California real estate in particular? If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Let's get to some upcoming events. July 12th, we'll be doing Stay Put Cash Out or Change Seats. That's going to be in LA at LAREIC. July 13th, I'll be doing marketing trends up in Sacramento at NorCal REIA. And then July 21st, I'll be doing marketing trends for real estate pros in Pasadena. So 2 chances to see me nerd out on marketing and PR. September 21st, Stay Put, Cash Out, or Change Seats with Invest Club for Women. And then the 28th, we'll be doing the same talk in the Glendale area in conjunction with Robert Hall and Invest Club for Women. And next week, keep your eye out because we're going to be releasing officially I Survived Real Estate 2016. And I think you're going to be pretty stoked about the panel this year. It's impressive, and I'm really excited to include something we've never included before. For more information on hard money loans, including fix and flip, buy and hold, and new construction, starting at just 6.9%, y'all, you can check out thenorrisgroup.com, or if you're interested in passive investing with trust deeds, you can always check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.